All right, let's jump right in. The future of finance? It's being built right now, as we speak. But here's the thing. It's not being built on just one single track. Nope. We've got three very different players, and they're all laying their own very different sets of rails, all racing towards the future of where your money's going to go.
And that really gets to the core question for all of us, right? When you move your money around, where is it actually going? Because the answer, well, it's getting a lot more complicated, and frankly, a whole lot more interesting than it used to be.
So, is it going to a digital bank? You know the type: slick apps, maybe some high-yield savings accounts, and all the stability that comes with a government charter. This is kind of the modern, clean, buttoned-up path.
Or is it zipping through the decentralized kind of Wild West world of a crypto wallet? This is the super tech-forward path. It's all about speed, low costs, and, a completely new way of thinking about what value even is.
Or, and this is the part that might surprise you, is it coming out of a good old-fashioned ATM? Yeah, that's right, physical cash. It turns out all those rumors about the death of cash, they might have been just a little exaggerated. So let's take a look at who's betting big on each of these futures. Okay, so first up, let's talk about SoFi. Their strategy is just fascinating because, look, they're not picking a side. They're not choosing one path over the other. Instead, they're trying to build a bridge, one that connects two of these really distinct financial worlds.
And this slide really shows you their whole journey. I mean, SoFi started out as, the student loan refi bro, but just look at this transformation. They went through all the hoops to become a real chartered national bank in 2022. And now they're enabling access to Solana, which is a super high-speed crypto network. This wasn't just a random decision, you guys. It's a really calculated move to keep their tech-savvy customers right there in their ecosystem.
So here's the strategy, boiled down. On one hand, you have the boring banking, the regulated, stable stuff that lets you sleep at night. But they're pairing it with cool crypto to capture all the excitement and, let's be honest, the high engagement of that world. The end goal? They want to be a financial super app, playing both sides of money's future at the same time.
All right, let's shift gears to our second player and see how this all connects. While SoFi is trying to be the destination for your money, a giant like Mastercard is focused on something different. They're building the roads, or maybe more accurately, they're building the toll booths.
Now, to really get what they're doing, you have to understand MetaMask. In simple terms, it's the most popular crypto wallet out there. Think of it like the key that unlocks the door to this whole world of crypto apps for millions and millions of people. It's their digital wallet, their passport to what people are calling Web3, which is basically the next evolution of the internet, all built on blockchain.
And this quote just illustrates Mastercard's mindset perfectly. See, they partnered with MetaMask to let users spend their crypto directly from their wallets. But the key insight here is that Mastercard is being strategically agnostic. They don't really care what kind of value is moving. It could be US dollars, a stablecoin like USDC, or even tokenized bananas.
They just want to own the swipe. That's it. They want to own the transaction, the tap to pay. So whether you're spending dollars or a stablecoin or some crazy new digital asset, they want to be the rail that it moves on. And, of course, collect their small fee every single time. It's a classic infrastructure play, and it's how they're future-proofing their entire business for a world where transactions happen right on the blockchain.
Okay, so we've got the digital bank on one side and the crypto toll booth on the other. It really feels like a two-horse race for the future of money, doesn't it? But while everyone is glued to their screens watching crypto, a massive move is happening in the physical world. What about cash?
And that brings us to maybe our most surprising player of all, Brinks. Yep, the armored truck company. They're making a colossal bet, not on pixels on a screen, but on good old-fashioned paper money.
And we're not talking about a small bet here. Look at this number. This is a $6.6 billion deal to acquire NCR Atleos, one of the biggest ATM operators on the entire planet. So while everyone on fintech Twitter is debating the next big crypto thing, Brinks is quietly doubling down on the actual infrastructure that spits out physical money.
And I just love this analogy from the source material because it nails the idea perfectly. Cash is kind of like fintech's dirty little secret. It's like vinyl records. Everyone said they were dead, but they never really went away. Now they're back. Especially in underserved communities and emerging markets, cash is still king. And Brinks is betting that this physical layer, this last mile of money, isn't just here to stay. It's a massive consolidating business opportunity.
So, okay, we now have these three stories that seem totally separate, right? A digital bank that's getting into crypto, a payments giant building on-chain toll booths, and an armored truck company buying up every ATM it can find. How on earth do these fit together?
Well, this table really pulls it all together. What you're looking at is that each of these companies is building a distinct financial rail. SoFi, they're betting on the hybrid user, the person who wants both the safety of a bank and the excitement of crypto. So they're building that bridge. Mastercard is betting on the swipe, the transaction itself. They're building that agnostic infrastructure for any value to move on-chain. And then you have Brinks. They're betting on physical reality, on owning that last mile of cash. The thing is, they aren't necessarily competing head-to-head. They're building parallel systems for a future where money is going to flow in a lot of different ways.
And that leaves us with one final, really big thought. Maybe we've been asking the wrong question this whole time. Maybe it's not about which one of these rails is going to win. The real question is, as these different systems start to connect and overlap, who's positioning themselves to own the entire station? Now that is the multi-trillion-dollar question for the future of finance.